Okay. Good morning, everybody. We're just going to give everybody a few minutes to get all signed in and settle in for the next webinar. So appreciate your patience just for a few moments here. Okay. And give it one more second and then we'll get started. All righty. So good morning, everybody. Happy, beautiful Thursday. It's gorgeous outside. Thank you for joining us. Welcome to the Orange County IDA's webinar. Today's focus is on loan forgiveness for the Paycheck Protection Program. I'm Ari Viasuso. I'm the CEO of the Orange County IDA. Again, thanks for joining us. This is the 6th in a series of webinars sponsored by the OCIDA to help Orange County businesses cope with COVID-19. We've covered a variety of business topics on these webinars, from the PPP loans to employee and customer concerns to re-envisioning your business in this new normal. Today, we're going to continue the PPP, the Payroll Protection Program loan subject, which we started last week. Our focus is really on loan forgiveness. While final guidance still isn't available from the Small Business Administration, we're fortunate to have with us today Joshua Steele, a partner with the law firm at Harris Beach. He's with us to help guide us through this and through what we know and so far about the loan forgiveness program. So please remember that you can ask questions through the Q&A dialog box on your screen. We'll answer them at the end, and we'll get to as many as we can today, and those we can't get to, we'll follow up with after the webinar. Speaking of which, any questions that were unanswered in last week's webinar have been submitted to Congressman Maloney's office, and we'll address them as soon as possible. In addition, we want to be sure that we're addressing all of your business needs and business issues. So please answer the quick 2-question survey at the end of today's webinar to help us determine the topics for future webinars. Finally, we will be hosting another webinar next Thursday, also at 10 o'clock, focused on reopening procedures for manufacturing companies based in New York. I want to be clear, even if you are still open, these procedures are still essential and able to be operational and to continue working once New York State rolls out its reopening. So if you're a manufacturer, we encourage you to listen in for requirements, any kind of business really. We encourage you to listen in for requirements, procedures, and reporting guidelines. So now, to today's speaker. Josh Steele is a partner at the law firm of Harris Beach. He represents employers in administrative proceedings before the New York State Division of Human Rights, the Equal Employment Opportunity Commission, and the Unemployment Insurance Appeal Board. Most relevant to today's discussion, Josh has become one of Harris Beach's experts on the Payroll Protection Program, and we're so pleased he could join us today to share what he knows. So Josh, I will turn it over to you.
Thank you very much, Lori. I appreciate it. I guess the first thing to state here, as Lori already explained, is that we are still waiting on official rules from SBA Treasury on PPP loan forgiveness. What we have right now, which is actually helpful, is the forgiveness application that was issued late Friday. We also obviously have the actual statute from the CARES Act, which sets forth the statutory framework for forgiveness. But in other areas of the PPP, the interim final rules issued by SBA and Treasury have on occasion differed, expanded, or restricted the PPP process when compared to the actual statute. So all of this is kind of subject to final rules from the SBA, and it could change if what they say later is different. And obviously as well, you know, the Q&A guidance often changes our opinion on any aspect of the PPP, and that'll be the same thing for forgiveness. So kind of big picture, what do we know about forgiveness? We know that the forgiveness amount will equal the sum of the costs incurred or payments made during the 8-week period commencing on the date you receive the PPP loan on the following topics or areas: payroll costs, which I've got a slide detailing what they are, interest on any covered mortgage obligation, covered business rent or lease obligation for real or personal property, and covered utility payments, which is defined to include right now service for the distribution of electricity, gas, water, transportation, telephone, or internet access. The big rule here is that 75% of your forgiveness amount must consist of payroll costs. So the idea being that they want this to go to payroll, they want it to go to employees. Whatever your total amount of payroll costs that are forgivable are going to be, they'll tack on the extra to get you to that 75-25 ratio, but they really want that 75%, that's a requirement. I will just say that that's being challenged in court. That was not something that was in the statute. That's something that was in the SBA interim final rules on this, and it's being challenged as them acting ultra vires, basically acting in a manner that's inconsistent with the law. No idea how that's going to turn out or when we'll get any answer on that. So we can go to the next slide. And payroll costs. This is kind of the big question, what's included in payroll costs? These are kind of what we know right now to be included in payroll costs. Wages, salaries, PTO, any other kind of cash payment that are going to employees, capped at $15,385 for the 8-week period. The reason why it's capped is because it's limited to people for an annual salary of $100,000. That's the equivalent, 8 weeks. The 8-week equivalent of an annual salary of $100,000 is $15,385. So that's the limit. It doesn't mean you can't pay people more than that in the 8-week period, but it does mean that anything over that will not be subject to forgiveness. Employer contributions for employee health insurance, including self-insured employer-sponsored group health plans, but we do not include any pre-tax or after-tax contributions by employees. The reason why we don't include the employee contributions is because that'll already be included in their wages and payroll category, so there's no double counting. So we're just looking at employer contributions there. Employer contributions to employee retirement plans, again, excluding any pre-tax or after-tax contributions by employees for the same reason. Employer state and local taxes assessed on employee compensation. The big one here that we know for sure is state unemployment insurance tax. I'm not aware of anything else in New York State. There might be, I think there's guidance, or there will be guidance on there, but that's the one we know for sure. Again, excluding any taxes that are withheld from the earnings, because once again, the earnings are going to be covered underneath the wage, salary, PTO element there. And then any amounts paid to owners, which includes owner employees, self-employed individuals, or partners, and that is capped at either the lower of $15,385 or the 8-week equivalent of their applicable compensation in 2019, whichever is lower, right? So if you're an owner and you didn't have a great year last year, you're not going to be able to make more this year under the PPP during the 8-week period. So we can go to the next slide. So we do know that forgiveness will be reduced in a couple different categories. The first one is a reduction in full-time equivalent employees, which I'll refer to as FTEs. And the second one is a reduction in employee salaries. So first we'll talk about FTEs, FTE reduction. So basically, your forgivable amount of the loan, I guess I'll step back. The first step here is to figure out in that 8-week period, what exactly constitutes forgivable costs. That's your first step. You calculate all your payroll costs, all your rent, mortgage obligation, utilities, everything that's subject to forgiveness, and then apply that 75-25 ratio, and that is your total sum of potential forgivable money. Now that is the total pot that we're talking about here is capable of being reduced. The forgiveness amount can be reduced. So with respect to FTEs, you're going to look at how many FTEs you employed on average during the 8-week covered period that commences right after you receive the loan, although there's a new rule about that we'll get to. But again, we're looking at that 8-week period. What was your average FTEs during that 8-week period? And then you compare that to the FTEs that you employed during one of these two periods, either February 15th, 19 to 6/30/19, or your average FTEs from 1/1/20 to 2/29/20. And you do that ratio there. So I guess in whatever that ratio is, you get that number and you multiply that by your forgiveness amount, and it'll result in a reduction. So simple math. I'm an attorney. We're not great at math. Here's the example. You've got total calculated forgiveness based on that 8-week period of $100,000. During the base period, your best base period, you select either one you want, unless you're a seasonal employer, and then you have to select the 215 to 630 period from last year. So you select your base period. During that base period, you average 100 FTEs. During the 8-week period that counts for forgiveness, you had an average of 75 FTEs. In that situation, your loan forgiveness would be reduced from 100,000 to 75,000. And that's because you take the 75 divided by 100, which equals 0.75. That's your reduction ratio, and you multiply that by 100,000, and that's how you get your reduction. Now, there are some exceptions to this, and we can discuss them moving forward, but we can go to the next slide now. So the second element of forgiveness reduction is reduction in employee salary or wages. So what they're looking for is any employee that has a reduction in wages or salary that is in excess of 25% of the salary or wages that they made during the most recent full quarter which they were employed, which for our purposes here is probably going to be in the one that started January 2020. And again, so they're looking at that reduction has to be more than 25%. This is not applicable to anyone who in 2019 in any single payroll was paid an amount that if annualized would have equaled $100,000, right? So this is not, they're limiting this reduction to lower wage earners and medium wage earners. If anybody made more than $100,000 in the previous year, or if they had a single pay period, that if it had been continued for all pay periods, they would have received $100,000. This does not apply. The big kind of get out of jail free card or safe harbor with respect to both the FTE reduction and the employee salary deduction is that any reduction in wages or reduction in FTEs that occurred between February 15th, 2020 and April 26th, 2020 will not reduce the forgivable loan amount as long as the reduction in employees or wages are eliminated or cured. They use eliminated, cured might be a better word, by 6/30/2020. We do have some additional information on that process as well. So that's everything in those slides was like, listen, here's what we have from the rules, here's what we have from the law, here's what we have from some guidance. Now we're going to go to the PPP forgiveness application, which does provide some really good information that's going to be helpful to employers. The first thing I think is this idea of an alternative payroll cover period, right? So one of the concerns that a lot of borrowers, employers had with respect to that 8-week period is, listen, I don't have any notice about the 8-week period. I get notified my loan's just in my bank, and I don't have time to bring people back or to get my payroll back up. That doesn't seem fair. Well, the PPP application allows employers to utilize an alternative payroll cover period that starts on the first day of the first pay period following the PPP loan disbursement in order to calculate their eligible payroll costs for forgiveness during that 8-week period. This is a great thing. It removes that doubt. It gives you some time to bring people back. So now you can decide and elect to use that alternative period as opposed to starting the forgiveness calculation on the day you receive the loans. One thing we also know now, we did not know in the past, how do we calculate an FTE? You know, in our world, we often think full-time is 40 hours, which makes sense because that's when, you know, the overtime requirement kicks in. In some previous federal legislation, most notably the Affordable Care Act, full-time was 30 hours a week on average. So the question is, what are we going to do? Now we know the full-time employee calculation for each individual employee equals the average numbers of hours paid per week during that 8-week period, divided by 40 and rounded to the nearest tenth. So you're going to look at this on an individual employee basis, see how many hours they averaged or they worked in each week, divided by 40, which is good. So it's not 30, it's 40. And with respect to anybody who's not quite on 40, you know, you can round to the nearest tenth in order to get that equivalent. The big thing here is it's capped at 1 per employee. So if somebody works 60 hours, it doesn't equal 1.5. It's only going to be 1. And this is a pretty good outcome because it allows us to do those calculations and as opposed to the 30-hour threshold, especially when we're looking at the base period calculation. People were worried that if anybody over 30 constituted a full-time employee, they would really be hit by the reductions during that 8-week period. We also know more because of the application on the FTE reduction exception, right? So the FTE count will not be reduced by employees that were furloughed because of the COVID-19, between those dates, February 15th and April 26th. So if they're furloughed and then turn down a written offer to return to work, that person will not count as a reduction. It won't go into that calculation. The important thing there is that we document both the written offer and that we document the rejection. The other element too is the offer has to be made in good faith. I think that in this situation, everyone will be making good faith offers, but we need to make sure that we're trying to actually get them the offer and trying to get them to come back to work. Also, if an employee was terminated for cause, the FTE count will not be reduced. If they voluntarily resign, that's the same situation, it won't count. And then also if they voluntarily requested a reduction in hours, it won't count. And for all of these, it has to be as long as the employees were not replaced during the 8-week period, which makes sense if you think about it. If somebody was, resigned, week 2, we replaced them week 3 of that period, we shouldn't get basically 6 free weeks of a reduction of an FTE because we actually replaced them. I would think we might get some additional rules about what happens if we have got gaps. If we've got somebody that resigned week 2, or they resigned at the very beginning or prior to the PPP even being received by the employer, but we don't hire somebody or get a replacement until 4 or 5 weeks later. We might get some guidance on that, but I think given what we know now, the best approach, if you do have an opening and it's not absolutely necessary for you to fill it, that you might not fill it as long as you're underneath one of these categories. The big thing with respect to all these categories, I know I talked about it with respect to the furlough and the turned down written offer to return to work, but for all of these, you're going to want to be very clear that you're documenting that you fit within these categories. So, to the extent there's a voluntary resignation, we'd like that in writing confirmation from the employee. To the extent that you can't get that in writing, then make sure you're collecting and documenting email attempts, letting them know that, you need them to return to work, and letting them know, documenting that you're not receiving a response. I would try multiple times. You really want to make sure you've got a good paper trail there to ensure that we can fit within this, because this is a big one, a big exemption to ensure that we're not reducing that FTE count during our 8-week period. We can go to the next slide. So another thing that is new on the forgiveness application, or at least clarification, is that, listen, the payroll costs include pay for work performed during the 8-week forgiveness period, even where the wages are paid after the 8-week period due to standard payroll cycles. So this was a concern. Depending on the date of your receipt of the PPP loan and how that worked and interplayed with your payroll dates, some employers were fine, some employers, kind of lucky. Other employers, had a huge gap, and the question is, well, listen, is this really going to impact my total amount of payroll? Underneath this rule, for the last payroll period that falls within that 8 weeks forgivable period, as long as the time from that is paid out in the following payroll check, just along, again, continue your standard practice, it'll be counted. The fact that the check is not actually issued during the 8 weeks is okay, as long as it's based on hours worked during that 8 weeks and is paid the next payroll date, which is a big thing to help that issue in conjunction with the issue of selecting an alternative payroll period. If we want to, that we already discussed, are two things that are really going to help employers ensure that they're getting credit for all the payroll costs associated with those 8 weeks. So the FTE reduction safe harbor. This is from the application, and I discussed it on a previous slide, saying, listen, you look at this and you average this period and compare it to this period, and then, hey, if you cure by June 30th, then you're okay. This is kind of straightforward right from the application. It says that there'll be no reduction in forgiveness due to the FTE reduction as long as you meet these criteria. And that's this: the total FTE count for the pay period that includes 2/15/20 is higher than your average FTE count during your 8-week forgiveness period. So you basically have to have suffered some kind of reduction when comparing 215 to that 8-week period. And then the FTE count as of 6/30/20 is equal to or greater than the FTE count for that pay period that encompassed 215/20. If you meet this criteria, and there's worksheets on the application, if you meet this criteria, then you basically get a safe harbor, and you will not have any reduction in loan forgiveness based on your FTE counts. Again, this is a really nice deal. It provides some clarity on how to do that. And I will say, the application itself, I mean, it's long for an application, and they often there's a bunch of worksheets involved within tables to fill out, and it's not going to be easy to do. A lot of it is employee specific, so you have to do it, for each employee. And they kind of make the math a little more complicated than it has to be in a lot of scenarios. But this is something that you can start working on now to at least get an idea with respect to forgiveness, and it does provide some much needed relief with respect to this FTE reduction. You should be able to, at this point, have a pretty good idea and start calculating at least your base periods of FTE, so you know how you're gonna stand when the 8-week period ends. We can go to the next slide. So with respect to reduction in forgiveness amount based on reduction in salary, there is some additional information in the application as well. The big thing from my perspective that isn't getting a lot of press, but the application makes clear that when you're comparing salaries, they're looking at average salary or average hourly wage, which is great. The law itself didn't actually include average. It said total earnings. So you were going to be in a situation where you were, if they followed that, you were going to compare the total earnings that somebody earned during a full calendar quarter to those earnings that they earned during an 8-week period, and then getting a reduction if it was more than a 75% reduction in earnings. And obviously, when you're comparing, 3 months to 8 weeks, you're starting off with at least a 66% reduction right there, just based on timing. So the fact that they made clear they're using average salary or average hourly wages as opposed to total earnings is a big deal. So again, as we already talked about, the reduction will only occur where the average salary or hourly wage during the 8-week period was more than 25% less than the average salary or hourly wage during the first quarter of 2020. And then again, here we've got the safe harbor. They provided some more details in a worksheet to calculate it, but the takeaway is that if you do have a reduction of more than 25% in your initial calculation, you can still avoid a loss of loan forgiveness as long as the employee's average salary or hourly wage on 6/30 is equal to or greater than what their average salary or hourly wage was on 2/15/2020. So again, it provides a little more detail on how we're calculating that and how we can ensure that we avoid a reduction in forgiveness by 6/30. We can go to the next slide. So these are just a couple of FAQs, and I know that the IDA has a lot more to go as well, but these are just two that I've gotten quite a bit. The first is that, the question is, we offered laid-off employees a chance to return to work once we received our PPP loan, and some of them refused to return. How will this impact our forgiveness? So as I discussed, as long as we're documenting the good faith effort to get them back to work, that offer, and we're documenting the declination, then it won't count as a reduction in the FTE. The other thing I will kind of state is having less employees during the 8-week period, even if they're not going to be counted to reduce our FTE count for reduction of forgiveness, it's still going to most likely reduce our overall pool of forgivable money because it's one person that we're not paying. So that's something else to keep in mind as well, is that when you're looking at forgiveness, the baseline for forgiveness isn't what the loan amount was, although that is capped. Principal is the principal amount of the loan is the cap of forgiveness. What it's looking at is how much actually went out the door in that 8-week period. So if we have less employees working in the 8-week period, that's going to obviously reduce the potential forgivable amount in terms of wages paid out because there'll just be less of them. So you won't actually have the FTE reduction, but just practically speaking, less money going out means less potential forgiveness. Go to the next one. So how does an employee that is on leave under the FFCRA affect forgiveness calculations under the PPP? This is a big one as well that a lot of employers are experiencing. They go to bring somebody back to work, or they have somebody that never left work, at least not initially. They weren't furloughed, but the person has children and the schools are out and they don't have childcare, so they are requesting leave under the FFCRA and getting paid the $200 a day under that policy if it applies, if you're subject to it. For those individuals, the money that is paid pursuant to the FFCRA does not count as payroll costs with respect to calculating forgiveness under the PPP. The reason why it doesn't is because the money paid underneath the FFCRA kind of has its own avenue for getting relief through tax relief in the law. So the FFCRA tax relief trumps the PPP forgiveness. So it's one of those situations where if you've got people on FFCRA, you're going to want to make sure that in your payroll systems you're able to track them, differentiate between them and other individuals that are getting paid. So then when it comes to doing this calculation, you can kind of make sure you're putting them in the right area. The one question that I have gotten on, kind of as a follow-up to this is, well, listen, the FFCRA pays them $200 a day. What if I pay them, a little extra? What if I, make them whole with respect to the salary and wages? Does that extra money count? And all indications are that it would. So if you're paying somebody, the difference or a little bit extra on top of the FFCRA required payments under those leave provisions, that can count in payroll costs. But again, you want to make sure that you're differentiating between those two different types of payment in your payroll system. And now I believe we have some additional questions as well, and so I will turn it back over to you.
Thank you. So Josh, that is a lot of information. You clearly know your subject matter very well. So I think that's so much valuable information out there. We do have some questions that were submitted both before the presentation today and during the presentation. So I'll get to those. I do want to just remind everyone that the whole presentation as well as the slides will be available on our website at the conclusion of this. So you'll be able to go back, review it, kind of digest it on your own time as well. In addition to a video of the presentation. So you'll be able to hear what Josh has said, but also, some of these questions as well. So getting to the questions, Carl asks, one of our employees has seen her advertising sales commission dwindle significantly since the start of the pandemic. She's under the impression that she's eligible for unemployment benefits and is asked to be placed on a leave of absence for the duration of the pandemic. So Carl has actually two questions. One, if Carl agrees to this, will it jeopardize our PPP forgiveness? She's technically a part-time employee working fewer than 20 hours per week and receiving both an hourly wage and sales commission. So I guess I'll say that first, and then I'll go to number two.
Yeah, so as we kind of discussed with respect to this employee, if she's requesting a leave of absence and we grant that and it's all documented, the fact that, she won't be in our FTE count is all right because there's that safe harbor for people that are voluntarily doing that. I'll just again point to the other kind of add-on to that is that we won't be paying her wages during the 8-week period, so that obviously will reduce our potential pool of forgivable money just because it's reducing our payroll costs during the 8-week period.
Okay. So the second part of that is, or can she still work with us for us without jeopardizing her unemployment benefits? I really don't want to terminate her, and if I'm contacted by the Department of Labor, I would need to tell them that she is still employed. Yeah,
so from an employer's perspective, we should make it clear to employees that, one, we're not in the business of providing opinions on whether or not they're eligible for unemployment insurance. We can't do that. As far as telling them yes or no, we just don't want to step into that liability world. But the rule is that anybody that earns more than $504 a week is not going to be eligible for unemployment insurance in New York State. That's kind of the cap. If you earn more than 504, or if you work 4 days in any week, you're not eligible for unemployment insurance in that week. And so obviously you want to make that clear to them, and you'll want to avoid doing anything that you can even give the appearance that you're not being straightforward with UI. As you indicated there, if you're contacted, you're going to tell if she's still working for you, you're going to be truthful there. So she should be aware of that moving forward.
Great. Next one, Danielle asks, we use QuickBooks for payroll. Our payroll was processed Tuesday. We received the PPP funds on Thursday. The funds for the payroll were withdrawn from the bank account, the same account the PPP funds were deposited into on Friday. One, does the payroll period count toward the 8-week period? And two, 401k matches for the first quarter were made after receiving PPP funds. Does that match count as using the PPP funds?
So with respect to the payroll, it's actually a little up in the air because they let us know about, hey, we're going to have the add-on period at the end to cover hours worked, towards the end of the period that weren't paid until following. And at the same time, they could argue that the pay that is given at the very beginning of the triple P, if it's for hours that aren't in that 8-week period, that doesn't count as well, but it's not clear that they're doing that. So I guess the answer is it's not 100% clear, but hopefully we'll be able to include that because it was paid out within the 8-week period. I'm thinking they might kind of make us do an either or, situation potentially down the road, but as of right now, we'll try to do it and see what happens. I guess one big picture thing that this question brings up too, which is very important, is that, this application, the way this kind of works is your bank is going to be able to go to the SBA and say, listen, for this particular employer, here's the expected forgiveness amount, so go ahead and pay us that right now. So with respect to what's included and what's not going to be included, you're most likely going to have to get your bank on board. So just kind of the same way with the application process, and I'm assuming that some of you experienced this, different banks were saying different things, and some banks were saying things that maybe we're not kind of consistent with some of the rules, or maybe more restrictive, and the clients were saying, oh, well, what do I do? And the real answer there, practically speaking, is if the bank doesn't sign off on your triple P application, it doesn't matter. So you have to do what the bank says if you want to get the loan from that bank. And I think a similar situation might apply here with respect to these loan forgiveness applications. With respect to the 401k matches, I would think that they would count, even though they're kind of based on the first quarter. The retirement benefits just talks about costs that are paid during that period. So even though they were paid based on the previous quarter, if they're paid in the 8 weeks, I think that's going to count because there is no provision for retirement costs, that are made after the 8-week period just because they applied to hours worked in the 8-week period. So we're not, having our cake and eating it too. So based on everything we have now, the 401k contribution in the 8-week period will count.
Okay. The next one is from Lucy. She says, my question has to do with the relationship of the PPP, which I like to call it triple P rather than PPP. So I'm going to switch over to that. The triple P. And
I'm with you.
Yeah. Her question has to do with the relationship between the triple P and the EIDL 10K loan. I heard that if you receive both loans, you only have the PPP amount and the EIDL will be subtracted. But if we use the triple P for allowable expenses and the EIDL for other allowable expenses, would that 10K be forgiven and added back in?
So I think I understand the question here.
Oh, you know what? I'm sorry. I left off.
With respect to the
Josh, I'm sorry. There's a little bit more to it. So let me just,
I apologize.
No, that's okay. I stopped. So I will say, she says, in our case, we received $350K for the triple P and 10K for the EIDL. I was informed we can only use the $350K, but if we do have actual expenses higher than the $350K and use allowable expenses for both, would the whole $450K be forgivable? Or I guess it's supposed to be $360K, but would the whole amount be forgivable?
Yeah, so there's interplay here between the triple P and the EIDL emergency grants. And the first thing to remember is that the emergency grant of up to $10,000 under EIDL is, as long as you use it for required, the allowable uses, which obviously are very consistent with respect to the triple P, and then there's a couple more allowable uses, that money does not have to be paid back, right? So it's a grant. So that is free money. So what the triple P says is, listen, if you already got $10,000 in free money from EIDL, we're going to reduce your forgiveness by $10,000 here so that an employer that applied for both the triple P and idle will be no better off in terms of forgiveness or grant than an employer that just applied for triple P. So that's the situation. They've been pretty clear on that. That's in the statute itself. They specifically carved that out from forgiveness. And so I don't think there's going to be any change there. So if your triple P loan was $350,000 and your idle grant was $10,000, your total potential forgiveness will be $340,000 under the triple P. Because again, you're not going to be able to get. They're making sure you are in the same situation as an employer that just got a triple P.
Okay. Well, Lucy has a lot more questions that are pretty specific, so I think Lucy's on the call today in the webinar. We'll reach out to you directly to address some of these, just because I think they require a little bit further conversation. So the next question is from Rita. She says, my business is an essential service. 2 of my staff resigned rather than return to work. 2 of my staff were terminated for threats against the company when they were told they had to return to work. Are they still included in the number of staff I attempted to bring back? Their positions cannot be filled due to lack of availability of qualified workers.
Yeah, so as long as we document, and if we haven't, I would go back and look at the documentation now with respect to all 4 of those employees, and feel free to add on to it if we're not sure, we don't think it's really clear. Really make sure we have everything, print it and save it. But under the safe harbor, voluntary resignations shouldn't count against us to reduce the FTE count, and termination for cause as well should not count. Now, the one kind of caveat there is that termination for cause is a legal term of art. It means different things. I would think that making threats against the company constitutes termination for cause, but you'll just want to document why that was and really make sure you have the information there. And if that's the case, then they will not count against us with respect to the FTE calculation.
Okay. She also says, currently when I use a loan forgiveness estimator, the $10,000 EIDL grant affects the repayment amount. If I include it in the calculation and everything else remains the same, I owe $10,000 more than if I do not enter it. Is she missing something?
Yeah, that's the similar, and it's a very common question, but that's similar to the previous question. If you got the idle grant, that's free money. You don't have to pay back that, but you're going to have your total potential forgiveness amount reduced by $10,000, so that it's not really double dipping. But in terms of money from the government, you're not going to get more forgiveness than the triple P principal amount, even if you got the idle grant as well. So they're going to make that a level playing field across the board.
Gotcha. And then she lastly says she's now seeing interest added to her triple P loan on a daily basis. Did she miss something in the fine print when she applied?
I don't know, but the interest is being accrued on triple P loans at 1%, 100 basis points is the interest. I'll just point one thing out here. There's a little bit of conflict. The law itself says that forgiveness is limited to the principal amount of the loan. That's the cap on potential forgiveness. In one of the interim final rules, I want to say that it was maybe April 14th, and I could be wrong on that, but so I apologize. But one of the interim final rules indicated that forgiveness could equal principal plus any accrued interest. So that's a little unclear because there are inconsistencies between the rules and the statute itself. But yeah, interest will be accruing on these things at 1%, and it shouldn't be any more than 1%. If it is, you might want to talk to your bank.
Lastly, Terry just says, I know some of this was covered during your presentation, but I just want to kind of draw back to this. What counts as payroll costs, especially officer draws, housing stipends, bonuses and wages for worker that is part-time, and a 1099 at year end, so mileage, commissions, etc. Any of that counting as payroll?
Sure, absolutely. So with respect to owners, officers draws, all indications are that they will be included, subject to them that limitation as kind of payroll costs there, that 15,385 limitation, or potentially, depending on what they got paid the previous year. I guess the only other issue of an officer, I guess, isn't an owner, then there might be a question for them, and I'm wondering how they're paid. But I will say that SBA in the past, under previous 7A programs, which is where the Triple P falls under, they treated owners as employees for the purposes of loans as long as they worked, I believe it's at least 40 hours a month. Or sorry, officers, including officers. Officers were considered employees as long as they were employed at least 40 hours a month. So I think it's likely that that'll be the same here, but we don't know for sure on that yet. We're still waiting on additional guidance. With respect to some of the other things, payroll costs, housing stipends, a new one. I would think that that's given to employees, then it would count as a payroll cost. For example, things like tips and cash tip replacements, that's included, commissions included. I would think that we'd have an argument that housing stipends included. One thing to really check there is, hey, was this included when you applied for the loan? Was it included in your payroll cost for the purposes? Because the payroll cost definition for forgiveness is identical to the payroll cost definition for figuring out your loan amount. So I would look and see what was included in the previous application, and it's likely that they'll apply the same rules, from at least from a bank standpoint. Unless they made a mistake, and then they might change that. Bonuses and wages. So bonuses and wages, as of right now, constitute payroll costs. The only potential exception, other than the 15,385 cap, I just caution anybody from doing something until we know more. Caution them from doing anything solely for the purpose of maximizing forgiveness. So for example, if you know you have a lot more money out there, you want to increase your payroll costs, you just pay everybody whatever else it takes to get to 15,385 with no basis. Again, there's nothing that says we can't do that, but I worry about changing practices if we don't have a reason for doing it other than maximizing forgiveness. Because then the question is, did we really need the Triple P loan, right? And that's obviously a hot topic right now. So I'd really kind of consider it before you make any changes to your past practice with respect to payments. The 1099 thing to keep in mind, there was a lot of confusion about this. But it looks here like you've got an employee that you also pay certain things to them through a 1099 as well. It's likely that 1099 payment won't be included in forgiveness. And if anybody is just an independent contractor and just receives a 1099, that, based on what we have right now, won't be included either in payroll costs. There was a lot of confusion about this at the time, but the rule basically is that, listen, if you're an independent contractor, then you're self-employed and you need to apply for the Triple P in your own right, as opposed to being covered by an entity that you do work for. And, I'll throw on my labor hat and just kind of say, listen, be very careful with the 1099 first employee classification. That's obviously a hot topic in New York State and has been for several years. And we don't want to do anything with respect to an independent contractor that would provide an argument to workers' comp or unemployment insurance that that person is actually an employee and that we've been misclassifying them for, a period of years. So keep that in mind as well.
Okay. One other question about sort of maybe your labor hat here. There's one question that asks how will this be handled from a tax perspective? And that might be pretty complicated for each person, but if there's a broad brush explanation of how the Triple P loan will be handled from a tax perspective. And then also, when can you lay people off without penalty after June 30th?
So as of right now, there's no indication that laying somebody off after June 30th would impact it at all. Again, that's just because all we have is the application. That is something that I think it's likely will be addressed in interim final rules and regulations and guidance with respect to any kind of requirements or any potential reduction or penalties for having significant layoffs after the 8-week period or after the June 30th. There might be some hooks that kind of go into that, again, based on the rules. I think that's likely because I'm sure that if there is a lot of publicity about companies that get forgiveness and everything else, then lay everyone off on June 30th. That's going to be a hot topic. We saw that similarly with some big companies that applied for Triple P. It got some publicity. It got, there were some issues in the press with respect to that. And, not only did the companies themselves kind of back out of the Triple P, but in response, SBA and Treasury put out new guidance on that very topic. So I think if there's an outcry or there's issues about mass layoffs after June 30th, we might see something similar for that, or they might actually plan ahead and put some rules about that in the interim final rules to kind of address that very situation. The only thing on the tax treatment that I'll say is that I guess there's two things I'll say, and then I'll say contact your tax professionals. But under the law, the current understanding is that amounts forgiven under the CARES Act are excluded from income, which is a good thing. The issue with respect to that right now is that it's been a while since I've looked at it, but this was the past couple of weeks. Treasury put out, or maybe the IRS put out rules basically saying, yeah, the forgiveness doesn't count as income, but the money you pay out during payroll that is forgiven, we're not going to count that as an allowable business expense, which kind of puts you back to the same situation. So I know that that's being challenged. Some members of Congress are upset about that. They intended it to have favorable tax treatment as the argument, and I know that it's out there. It'll be challenged, and we'll see if we get clarification on that second prong.
Okay. These now are questions that have been asked during the presentation. So Amal asks, as an owner employee, how will this affect my Triple P loan forgiveness? So
as of right now, there's no indication that there's going to be a separate application for an owner employee or anything else. That basically, if you're a sole proprietor or anything else, you're going to be subject to the same rules, including the 75-25. The only additional thing I'll say is that the owner is subject to not just the 15,385 limit, but also the potentially lower limit of their 8-week equivalent from the prior year's earnings. But as of right now, we don't have anything else with respect to forgiveness that's particular for owner employees. I guess I'll just throw a caveat in there. One of the things they do say in some of the regulations is that the cost of an owner employee, their health insurance, their employee benefits are not included in payroll costs. Not sure what the reasoning was for that, but that's one thing they've stated in several regulations that we don't have an awful lot of clarification on. They just kind of threw it in there, but that is there. So the owner employees are treated a little differently with respect to what can be included in payroll costs.
Okay, this one is it's personal to me because they're actually asking about the OCFC granted some $10,000 loans. Excuse me. And question from Anthony is if the $10,000, he says if the $10,000 was EIDL was from the IDA. So he's referring to the $10,000 loan that the OCFC extended that has to be paid back. Does that have to be put down on the Triple P forgiveness application?
So was it under the EIDL grant provision, or was it separate? Was it just something that was not underneath the grant provision of the CARES Act? Do we know?
It's totally separate. This is a local. This is our IDA. Yep. Our LDC. Yeah. It's just independent.
No, there's no indication that any other loans or any other social liquidity you get that should have no impact with respect to the Triple P. All they're doing is making sure that there's not multiple avenues for forgiveness of the same quote unquote money under the Triple P and the EIDL grant. So that there shouldn't be an issue there at all.
Great. The next one from James: Will the wages paid through the Triple P be subject to wage totals used in audit calculations for New York State workman's comp by employers?
I don't see why they wouldn't be. There's nothing out there indicating that they are, but I think they fall underneath the pre-existing WCB definition of wages. So I would think that's very likely.
Okay. Alan asks, how is transportation defined? Is a vehicle lease or fuel included?
It's not defined, unfortunately, yet. I'm sure it will be in the interim final rules. The way we've kind of looked at it is that, and this is kind of how some banks were doing it, some accounting firms, is if it's something that's an allowable business expense for tax purposes, and it's either pursuant to a lease or it's pursuant to a loan payment for that thing, we think that there's a strong argument that it'll be included. That's how we would treat it on the kind of front end. So we're kind of assuming that they knew that there was pre-existing rules about what counts as a business expense, and so that they're intending to follow those. We don't know that for a fact, but we think that's reasonable. So again, we'll get rules clearly defining what that is, but our argument has been, kind of our approach, if it's a business expense for tax purposes, then it falls within that, then it should be included in that loan or lease payment as well.
Great. Deborah asks, do these forgiveness regulations apply to sole proprietors and independent contractors? We received a PPP and now are being told by the bank that the forgiveness rules may have changed for these two categories. We're following the 75 and 25% rules and thought that would be forgivable at least.
Yeah, so we don't, as of right now, there's nothing indicating that there's separate rules in terms of the actual forgiveness with respect to these two different categories. We still have the, like I said, the cap on either 15.385 on payroll or alternatively the 8 week of average of what you earned the previous year. But other than that, we don't know for a fact that anything else is going to be different. When they did this, they didn't do a really good job of, on the front end, kind of delineating that. There was a lot of confusion. So I would just say stay tuned and continue to work with your bank or your accountants on that and wait for kind of future guidance.
Okay. And of course, as rules change, we will also, probably Josh, call upon you to come back and talk about any updated regulations or guidance that we can get as a follow-up. So next question is, so the first question is, what constitutes an FTE? How many hours per week? I believe you said in the presentation was 40, correct?
Correct.
So is the same FTE calculation process, divided hours worked by 40, used to determine the FTE from the comparison period as well?
Yeah, every indication is yes. In the law itself, it just says, listen, we're doing FTE. There wasn't a separate definition for FTE for the comparison period versus the 8 week period, and nothing in the instructions indicates there'd be a separate test for the two different periods. So that'd be the same calculation up until we hear something different.
Okay. Angela asks, how about employees that choose to stay on unemployment because they're making more money? This is a common concern and question.
Yeah, and it's one of those things that, anybody that runs a business, as soon as they pass the CARES Act and the $600 federal add-on, all of them saw this coming a long ways away, but not very many people in the government did, at least not initially. Right. So I think the big thing here is that if your goal is to get people back to work because you want them back to work, you should make clear that you're offering them the chance to work, and that, listen, this may impact your eligibility for unemployment insurance benefits because you are returning. You are basically rejecting an offer to return to work, right? Mm-hmm. Now, there's some situations where somebody can make that rejection and still arguably be eligible for unemployment insurance, but it's underneath a different prong of the unemployment insurance, and that would be as if they're not working due to a COVID-related reason. The common one we hear is, I'm an at-risk person, and therefore I can't work. I've got a reasonable fear. I need to stay self-quarantined or self-isolated. So there's a chance that they could then be eligible, but it's underneath a different prong of unemployment insurance, and they would actually have to go through a different application. Technically, that being said, many employees aren't, and I doubt they will be caught. So from our perspective, we want to make the offer, put it in writing, make sure that they're aware that failing to return might impact their unemployment insurance, and document it all, and then, if they don't come back, we can use that FTE safe harbor, reduction safe harbor, and not count them against us during the 8 week period.
Okay. So next, Christine asks, is a company entitled to make a payroll cut or furlough and still have the loan revert to a grant?
Yeah, so you can, the loan will still be forgivable or at least a portion of the loan will still be forgivable if the money goes out in the first that 8-week period in those qualified expenses. But there's a chance that forgiveness will be reduced based on furloughs, based on reduction in payroll over 25% for any employee. So if you do have an FTE reduction, or you do have a reduction in salary that's more than 25%, forgiveness isn't off the table. It's just your total allowable forgiveness amount will be reduced by those calculations. And there's calculations in the worksheet to take you through and show you how to actually calculate that. So for many employers, you might not be able to avoid making some cuts or reductions in salary that might impact your reduction in forgiveness. You can do the math and figure out, listen, even though doing this is going to reduce my forgiveness amount, I need to do it for the financial health of the company, and that's fine. Just be aware of what the impact of those cuts will be on the forgiveness amount of the loan.
Okay. I want to circle back to Deborah's question from earlier, the one about the sole proprietors and independent contractors, the 75 and 25 rules. She submitted kind of a clarification for her question. She said the sole proprietor applied separately from an independent contractor, so they each received their own PPP. Has the forgiveness rule changed for these two categories?
So, no, with respect to, so you've got two different people there, one sole proprietor and one independent contractor. It sounds like the applying separately was correct there to do that based on the guidance that we've gotten to date. And I'm not aware of anything that would impact the forgiveness with respect to them other than limitations that we've already had. There's a chance that it will be, but I'm not aware of anything to date. But it's something I'll look into. I don't have very many clients that fall in that category, so it's not something I've researched. So if you give me this afternoon, I'll look into that particular issue, and I'll get back to you guys, and you can get back to her. Okay,
great. Vivian asks about people who are paid twice per month, exempt employees that are twice per month. Does that affect anything?
Well, it might make your life a little more complicated, right? So the application basically says you have to select payroll schedule, biweekly or twice a month or monthly or other. So there might be a bit of an issue there in terms of just figuring that out and how to make that clear that we have this issue, because I guess theoretically, when you're looking at what's included in payroll costs for the tail period, the tail of the 8 weeks, you could be in a situation where it's different. The timing of that based on every 2 weeks or twice a month might be an issue if it's different for different employees. So it's not something I keep in mind as a potential issue and see what happens and kind of work with your bank to figure out how to fill that out. But there's a chance that will cause confusion. Anything out of the ordinary causes confusion in my experience with the PPP. So I would just keep that in mind and work with your bank and your accountants on how to best communicate that in the application process.
Okay. Barbara asks, is there forgiveness if there's no difference in number of employees during 8-week period, but there were no payroll payments made prior to the 8-week period?
So I'm interpreting this as somebody had a total shutdown, and then when they received the loan, they brought everyone back and they were right back to the previous levels. And in that scenario, no, the fact that prior to the 8-week period, no payments were made should have no impact on forgiveness. And in fact, that's a very common, it's a common occurrence. It might not be common to go from 0 to full, but many employers went from 10% of their average payroll to 100% or 95% of their average payroll, within a week once they got the PPP loan. So I'm not aware of anything that would impact that.
Okay. What about a full-time employee who goes out on maternity leave and is covered under disability coverage during this 8-week period? That long slide tells me that's complicated too.
Whenever we get into, so I guess one other thing I'll point is that it obviously, and this applies not just to PPP, but it applies to the federal changes to FMLA and the federal paid leave and paid FMLA leave for COVID-related reasons under the FFCRA. Obviously, New York and the feds don't care what the other one's doing and have no problem having competing programs that don't work well together and cause employers a ton of confusion. So that's the first caveat here. Based on the guidance we have to date under the PPP forgiveness, I would treat this as a voluntary resignation or voluntary leave of absence. The fact that it's for disability doesn't particularly matter. I would just document that and ensure that, the reason why she's not working is because she's on leave. It has nothing to do with us not offering her the opportunity to work. Document that, and I would be hopeful that that would be included. At least I would argue that we should include that person in our voluntary leave of absence or voluntary resignation, at least temporary, for that FTE calculation.
Okay. What type of proof do I need from an employee if they choose not to work? This person has 3 part-time employees who have chosen not to work during this time period.
Well, it's funny, in the real world, which the people writing the rules don't operate in, often you just get people that don't take shifts, it's over the phone, or they call in, or they shoot an email, and then they're no longer available, right? So what they want is written confirmation. So best case scenario is something in writing from them, either email saying, I'm choosing not to work. But what you should do from your perspective is make sure you reach out to them in writing, whether that's letter in the regular mail, or if you have email addresses, great. Reach out to them in writing. Both ways. Document that you're doing that. Copy those letters, offering them the opportunity to return to work. I would also suggest following up by a phone call, documenting that you made the phone call, and indicate that you can ask that they return. Something saying that they're rejecting the offer to work, but the most likely they're not going to. So you just need to document it that they refuse to respond. You offered, they refused to respond, and really, practically speaking, that's probably the best you're going to be able to do in some situations. And I think that should be enough.
Okay. Thomas asks, will the non-payroll portion of the PPP forgiveness be reduced if you do not meet all of the payroll forgiveness markers?
So I guess I'm interpreting that as that you've got, 75% payroll, 25% everything else, and that total number equals, $200,000. Does the reduction based on, the percent reduction based on FTE reduction, does that apply to everything or just the payroll portion of that? It applies to everything. So you calculate what your total potential forgivable amount is, which includes both the 75% payroll cost and the 25% of everything else that's covered. And that is the number that's reduced by either a reduction in FTEs or a reduction in salary more than 25%.
Okay. Let's see, Radhika asks, we have a 401k adoption plan, which says that the company match may be made once per year, which will not happen until the end of the year. Is there a mechanism for the company to get reimbursed for the 8 weeks worth of 401k match?
As of right now, no. It's got to be something that, with respect to the retirement plan, that is paid out in that 8-week period. I think we kind of discussed it earlier, that they do have the mechanism for payroll that's paid out afterwards, but was based on hours worked during the 8 weeks to be counted. But there's nothing similar with respect to retirement benefit contributions. And I'm getting questions about can I make this now? Can I move this forward? I'll just say again, there's nothing saying that you can't do that, but there's always potential risk involved if you're changing your past practice in order, solely for the purpose of getting forgiveness. So that's all I can say until we get rules that might shed some light on what employers can do in that 8-week period strictly to, or solely for the reason of increasing forgiveness, and whether there's any potential consequences for that.
I'm muted, sorry. Hannah asks, is the PPP forgiveness form, it's a separate form, correct?
Yeah, separate form was published, I think Friday, like late Friday, of course, after I spent the day giving people advice that was then, no longer useful because the application came out. So it came out last Friday. You can get it. The easiest way to get this, I don't like the SBA site. It's not very user friendly, right? It feels like an old Yahoo GeoCities website in a lot of ways.
Yeah.
I like the Treasury site. If you Google Treasury PPP and click on kind of the homepage for Treasury PPP, I think it's either the first or second result. Then that's a great page. It's got all the FAQs. It's got all the documents, all the rules that have been published to date are there. It's very user friendly, all on one page, and the forgiveness application is there as well. One thing I'll say is that when it came to the application for the PPP in the first place, there was multiple versions that were put out, throughout the period. It changed. They didn't always do a great job of communicating that it was changing. So, obviously I've got PDFs saved to my computer of the application, but I check every day to make sure it's still the same application because it's certainly likely to be changed.
Got it. Okay. So Hannah has two other questions. One is, can we apply for an EIDL loan even if we were approved for the PPP? And is the EIDL still available?
So there's nothing that prevents you from getting both the EIDL and the PPP. The last I heard from EIDL is that program is either it was done or it was so backed up and so capped that it was, for all intents and purposes, done. That could have changed. That was several weeks ago. There were serious issues about that. So I would check with SBA about that and see what's going on. I have not looked at the EIDL stuff, the EIDL loans in quite a while, just because, at one point, and this was going back to April, but I had clients that were, 4 or 5 weeks with no response from SBA. And so it hasn't been something I've kept up on, but I would contact SBA and see what they say with respect to that. Again, just know that if you get the EIDL, the 10K grant from EIDL, it doesn't have to be repaid. It's going to reduce your PPP forgiveness as well. So, in terms of forgivable money, it's not going to help you out. In terms of cash flow, it'll help you out in the short run if you get it.
Okay. Excuse me. Another question is, I'm a self-employed landlord and earn my wages from rentals. All tenants left in January due to COVID. Am I eligible for the PPP? And if I get some of the space rented, can I still get the loan?
Oh, that's interesting. This is going to be one I have to follow up on, but I'll just say that there are potential restrictions with respect to landlords. They call it kind of passive real estate income that pre-existed the PPP in terms of 7A programs. There is a lot of confusion about whether all those restrictions on eligibility that were in place historically under 7A programs are still in place under the PPP. There has been numerous federal lawsuits challenging that approach, some of which have been successful, but some of which haven't been. So that'd be something that I would work with your accountant and your whoever does your taxes in your bank to see what they say. But it's something I can look into as well, because here, you're not a real estate holding company, or you're a sole proprietor. So I think you've got at least got an argument that you wouldn't, the other restrictions wouldn't apply to you. There's a chance there, but it's something I'll have to look into. But I would definitely talk to your bank, and if you use an accountant, your accountant, to see what they think with respect to this.
Okay. Excuse me. Elizabeth asks, if I choose to do an alternate cover period and do not begin until sometime in June when I can open, do I have to meet the June 30th requirements by June 30th or by the end of my alternate 8-week period?
So everything with respect to so June 30th is the deadline for, applying for the loan. It's also the time for getting obviously the employee count back up. I don't think they thought initially that this was going to be dragged out so long, that you'd actually have people where their 8-week period extended past June 30th. I believe that'll be something that'll be addressed in regulations. It makes sense to me that it would be June, that it'd be the end of your 8-week period as opposed to June 30th if June 30th falls within your 8-week period. But I've got no indication that'll be the case right now. The date used in the law and the date used in the application is June 30th. But I certainly understand your situation. You're not going to be alone. Obviously, anybody that gets a loan, now is going to be in that situation, or even a couple of weeks ago will be in the same situation. So I'm hopeful that'll be an area they'll provide guidance on.
Right. I know you have to go. You have a pressing engagement after this, so I think we might have time just for one more question. Natalie
Sure.
had, I think, a really good one. It says, we have several employers who are confused about the PPP and not being able to resume operations. So they did not know how to use the PPP, and their employees got unemployment while they were waiting for the PPP. The businesses used the funds for paying their other business expenses. Other than not getting the forgiveness, are there penalties for using most of the funds for expenses other than payroll?
As of right now, no. A lot of people are in the exact same situation, right? Obviously, I would look at the rules. The kind of one caveat is the rules that were in place at the time you applied are the rules that you have to follow. It's kind of like a safe harbor. So I would look at the date you applied, look and see what guidance was out there, and see if there was anything there. And I'm not sure, depending on what application you might have looked at, whether there was. I don't think there was, but as far as timing, but whether there was any certification on the application that you were going to use 75% of it for payroll costs. That was not something that was on the applications, at least initially, is my recollection. So as of right now, no. And I will say that you're in there are a lot of people in the exact same situation that you're in with respect to, listen, I got my PPP, but New York State won't let me open. So what am I supposed to do? And your options then were to pay people not to work, or to sit on the PPP loan money and hope that you would be able to get people back to work during the 8-week period. I think once you have the opportunity to reopen, bringing people back and getting them on payroll as soon as possible will go to at least allow some forgiveness. But other than the loss of forgiveness right now, I'm not aware of any other penalty for failing to meet that 75-25 requirement.
Okay. Well, that's great. We only have a few questions left, so the ones that are left we'll reach out to and answer directly. And Josh, I can't thank you enough for your time today. I think it's been very valuable, and you've been so thorough and knowledgeable. It's been quite impressive. So thank you. I know you have to run, and I will just say to everyone that's left, as a reminder, there's a quick survey at the end that will appear on your screen in a moment, and be sure to join us next week, which is the 28th. This session it'll focus on filling out the required forms that New York State is requiring to reopen or, remain open post-COVID. So we'll be sending registration information out by email, or you can check our website, OCNYIDA, for details. So I want to thank everybody for joining us, for taking the time. And I hope that you all have a wonderful, beautiful day out there, and you'll tune in with us next week, and we'll keep this going. So thank you so much.